You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Thank you, Jonathan, for joining us in the Blockchain CEO series. I'm so incredibly excited about our conversation. I think, and I'm gonna maybe pushing the envelope here, but I think we've known each other since your initial launch back in 2006. 16 years.
It's amazing how quickly it's gone by. Did we meet all the way back then?
Well, listen, you were on the pink sheets and we were having conversations. And I was pounding the table, I think, on you, but about transparency and the need to be transparent. And you know what? You made this huge pivot, and I give you a ton of credit for it. And you got on NASDAQ. You started, providing all the transparency around flows and asset levels on the Excel spreadsheet, that you provide every Friday. I mean, that was incredibly leading edge. If you think about it back then, nobody was doing that.
They're still not doing it. It's amazing. Some of the big asset managers don't even have earnings calls. Even like a T. Rowe Price with $1.6 trillion, they don't actually have an earnings call in 2022. It's an amazing thing.
Yeah, no, it is amazing, and especially since a lot of the information is available if people know where to get it. At least in the ETF side, it's available. In the mutual fund, it's not. I get that. And we live in a world where, in my opinion, transparency is critical. And that's what drove me into the ETF industry. And I think that was one of the reasons why you got into it as well.
There's no question. I mean, WisdomTree, before it became WisdomTree, was a financial media company called Individual Investor Group. And we did our story on the Qs in 1999, when the wrapper only had 40 billion in AUM worldwide. But when you could just list the advantages of the structure: transparency, intraday liquidity, and tax efficiency, that is meaningfully significant advantages. And so it seemed to me that the future in asset management should lie in the ETF format. And I pivoted the firm from media to asset management, thinking I could get in relatively early in what was evolving slowly. If the spiders were in 93, by 97, no one had shown up. By 99, really no one new had shown up. And one of the major reasons, I think, it wasn't fee compression. People were willing to compete with Vanguard on fees. They were most uncomfortable with transparency. The active mutual fund shops did not want transparency. And you still have that argument today, non-transparent active.
Yeah, we have a lot of peculiar labels in our industry. I think you would agree. Smart beta, as an example, is just kind of, as a label, comical. But that's neither here nor there. Listen, you've built a great organization in the context of a culture of people wanting to be leaders, people wanting to have an effect for investors. As a CEO, how did you do that? And I'm sure it's not just you; it's part of your whole team that philosophically buys into that.
So culture is very important to us. To me, really, as a CEO, you have three constituents: it's customers, shareholders, and employees, and you need all three to be successful. So our culture, one, foundationally, it was transparency. So a culture of transparency. We're telling the outside world everything that we do is transparent. So really, transparency creates a culture of accountability. So that's very, very helpful. We are regulated financial services. So standards are very, very high. When you were thinking about launching WisdomTree, you were launching against the 3 largest asset managers in the world, were the 3 largest ETF sponsors in the world. So the standards were so high. How do you thrive in a Vanguard world? Requires a culture of excellence, because they delivered, Vanguard delivered an excellent experience. And so I also knew that I wanted a certain type of person. In shorthand to HR, it would be hire happy people comfortable in their own skin. And that has helped us tremendously. They like each other. We all like working with each other. We are transparent. We have created a culture where we trust each other. So trust is incredibly important if you're going to try to innovate and do things, early or first. And you have to be willing to know that you can fail as well. But anyway, I put a lot of energy into culture from the very beginning. And it's, when I launched, if you go back to the early days, I recruited out the general counsel of iShares, the head of their European operation, who was really one of their 5 founders, the head of the Wirehouse channel, the head of the RIA channel. So I took a lot of ETF DNA into the company from the very beginning, but then I wrapped it in something slightly differently, which was self-indexing, which forced you to be a little bit different. It doesn't take a lot of energy to sell the S&P 500. It's known. It is what it is. If you're doing something different, it requires education, disclosure, a communication ability that is harder in some ways, but could be very much worth it over time.
Now, you mentioned that you started out as a media company, then you did the self-indexing, then the ETFs. You've made some major pivots as a CEO. At the end of the day, ironically, 16 years later or so, everybody's focused on dividends, right? But that's the origin of the firm. Walk us through some of the major pivots, including the hedge strategies that you made over the time.
Well, the biggest one was so when I launched as a media company, I was right about retail investing, but I got to retail investing in 1988, but it was sort of the death of print. Okay. So my common theme has always been about enhancing the investing experience. So we pivoted. That was a true pivot to go from media to asset management. Now in media, free information, commoditization of information. So I take an index, self-indexing, which is an information product, take an index, wrap it in the 40 Act, and you hope you have a little bit more protection from fee compression. Not that you're immune to it, but at least it was a proprietary exposure. So I was dealing with similar issues from the very, very beginning. When you say, I launched dividends in the beginning, it was really, it started with an idea that I did not want to compete with Vanguard on non-exclusive indexes on price. I just didn't think I could win that game. So then you needed to, if you're not, you need a, quote, better index. What is a better index? Often that would mean better long-term performance, but it could also mean different outcomes. So the one major thing about dividend weighting, so what we did in June of 2006, we launched using one methodology, 20 funds in a day. We did using dividend weighting, the developed world. 6 of them were the US, so the US total dividend market plus large, mid, and small, and then high yield cuts. And then 14, which were international, which was back then actually revolutionary because you only had iShares with international exposures. State Street and PowerShares were doing ADRs, so it was very limited. So we created size cuts internationally. iShares was using only MSCI exposures, which is a total market exposure. So you couldn't get international small cap. One of the beautiful things about dividends, when you are self-indexing, is the purity of the information. A dividend paid in the US is the same as a dividend paid in Europe, is the same as a dividend paid in Brazil. It is a clean metric that you could go around the world. And it was around that cleanliness, the purity of the data, that allowed me to recruit Jeremy Siegel in, right? Because he and Jeremy Schwartz, who you know well, they validated my back test for Michael Steinhardt. But one of the things when you're creating indexes, it's very easy to data mine or almost lie to yourself. Where you create something that worked historically, the question is, will it work going forward? And we always really wanted to make sure that we were really being high-minded. We weren't just looking for an opportunity, but could we deliver long-term better returns after fee than Vanguard? Now, being that they were cap weighting everything, we felt that they had limitations in their approach. Cap weighting is always overweight the most overvalued sectors or companies by definition. So now I launched dividends, and it was at the absolute height of value versus growth. It's been 15 years sort of out of favor, so I'm not good on my timing, but it's terrific to see that some of the original methodologies are thriving today. And I always just thought income, everybody likes income. I mean, you need income, and as rates continue to fall, I always felt it was an attractive way to construct a portfolio, but it's only one of almost an infinite amount of executions that you can do when you're really applying innovation to exposure creation. In the early days, that was index creation, but between indexes or active, a lot of this is now semantics. You used the term earlier, smart beta. In my original thinking, I was thinking of it as performance indexing. Could you create a set of rules to beat the market? And what I found is, I mean, the way I started, I did a lot of trial and error, yes. But what really got me to this initial dividend weighting was I wanted to create a Wilshire of dividends. I just took all dividend payers and I tested it, market cap weighted. And I went back to the beginning of the S&P 500 and it beat the S&P 500. So there was selection. And then I thought, well, how do I emphasize yield? I don't want to make it yield weighted because high yields in a small company are not scalable. So I made it actual dividends paid, and that was scalable. And when I tested that, I got an extra bump in performance. So I got some from selection, some from weighting, and then the light bulb went off. In weighting, oh my God, cap weighting has a flaw. And when I met Siegel, it was when .com was at its highest peak, and he was like, I love Vanguard. My S&P 500 fund, though, is wildly overweight tech at 100 PE. This can't end well. When I showed him dividend weighting and earnings weighting, for him, it really resonated. It's a way to correct for market cap weightings, overvalued nature, growth nature. This was an interesting evolution, an early weight, fundamental weighting, factor weighting, that we were really early in all of those kinds of pushes. But when you think about it, so one of the first funds I launched, meaning day one, 20 funds, you spoke about it, was DXJ, but at the time it was unhedged Japan, and it was winning for the first 6 or 7 years as unhedged. Then Jeremy Schwartz had an idea, and he said, there is an inverse correlation between the direction of the yen and the direction of Japanese equities. I say, this is Jeremy Schwartz, if we hedged out the yen, making it dollar weighted, one, you pick up yield, and two, it works better in the Japanese market. And even though for a while we underperformed dramatically, the fund grew dramatically. And then QE happened and it just took in, it served a purpose. It really showed that when the dollar is strong, you could access Japan in a way that would benefit investors, and it just took off. But it's always trying to solve, when you do it, when you're creating from a product standpoint, you're trying to create outcomes that can really work in different market cycles. And so really my great innovation was self-indexing, which allowed me a flexibility of approach.
Sounds like structure matters to me. I had to throw that out there, John. I'm sorry about that.
It does matter. And, it's interesting how resistant financial services can be to change. And they're always fighting the better structure in many ways.
So would you say that your success was driven by transparency, the democratization of investing, or liquidity? What's the big draw to your funds, or is it all of the above? And
well, I would say that first I got into ETFs relatively early. So I launched in 2006. I did a lot of funds in a day, 20 in a day. I did, another 10 over the next 6 months. So I tried to go as quickly as I could. So I got early. So let's say at the time in June of 2006, I think the structure only had like 600 billion of AUM to today's 10 trillion. So getting in early definitely mattered, meaning I participated with the direction of the ETF industry as it evolved. And so that was just very useful. And then we tried to do some of it, like, was it transparency? Was it dividends or income? Some of it was just access. My first big success was an international small cap. It was dividend weighted, yes. But before me, you just could not buy an international small cap ETF. So let's say you were an iShares investor. That fund was completion to your EFA exposure. And so some of it was just access. Some of it was income. Some of it was performance. Depends on the different time, but it was also a real belief that this was in the interest of investors, and we weren't going to hedge our bet. We were going to make it work, and and do what was necessary to make it work.
So that's a perfect transition to where we are today. So there's a sense of irony to me that your origin is dividends, and everybody's looking for dividends right now, right? But you're now pivoting more towards blockchain, right? Major pivot while still keeping the foundation growing, right? Talk to us a little bit about your vision in the context, and by the way, if you want to call it blockchain, you want to call it Web 3.0, crypto, whatever you want to call it, everybody seems to be trying to figure out the correct name for all this.
So terminology can be very confusing. There's a lot of semantics. It's one of the early things that was a difficulty for WisdomTree as a ETF sponsor, self-indexing. But you're passive. What are you? And it took a long. Eventually, people just stopped asking the question, but you would get confused on it. When you talk about dividends, you're talking about value orientation in the markets, and this has certainly been a value-oriented moment in time. When I started WisdomTree from a media company, I asked myself, how do you thrive in a Vanguard world? One of those answers, beyond a different methodology, was the actual ETF wrapper, which I thought, and at that time, Vanguard had not yet launched an ETF, but I knew they were coming, but I wanted to get ahead of them. And so on the ETF wrapper, I was much more competitive with a Vanguard than in mutual funds, where they were the dominant killer. Recently, over the last few years, last 4 or 5 years, I've been asking internally a couple of questions. So if my original question was how to thrive in a Vanguard world, my next question is, what could do to ETFs what ETFs did to mutual funds? And that's a question about the wrapper. So that's about tokenization and the wallet. The other question I was asking is a newer version of the original question. What's our response to zero fee beta, zero fee passive, which exists today? So fee compression in the 16 years that I've been in the ETF industry broke in a worst case scenario. Before, back in the early days, no one had ever undercut Vanguard on price. Now there are half a dozen firms willing to compete under Vanguard's price point, and you actually have exposures with no expense ratio. As a independent pure play in asset management, that's very scary that the expense ratio on liquid assets could go to zero. So with digital assets, so if you're asking, like, what do I call it? My largest umbrella would be digital assets. Within digital assets, you get, the way I use it, cryptocurrencies as an asset class, which is like a Bitcoin or an Ethereum or what have you. But then there is also tokenization and blockchain-enabled financial services. And I'm trying to put both together. That second part is competing with the wrapper, meaning ETF was a better wrapper, and it dominated asset management. Once you start tokenizing and blockchain enabling, and again, some words are semantics, but you could do more in your tokenized version of things, potentially, than you could do in the infrastructure that is the 40 Act on the old rails. So we're trying to get ahead from a functionality standpoint. Like when I thought about why ETFs would succeed, better functionality, better outcomes for the investor. So, if in the old days it was transparency, liquidity, and tax efficiency, you could say WisdomTree is an ETF sponsor. You could also say WisdomTree is a manufacturer of transparent exposures. Within that, tokenization is not a heavy lift for me. It's not hard to be transparent. The blockchain lends itself to transparency. So for me, that was my comfort zone. Nothing changed.
Well, but wait 1 second. I have to interrupt you on. When you're talking about tokenization, define what that means, because I don't think you're talking about creating literally tokens that are unregulated.
No, but I am tokenizing what I've said publicly: gold, dollar, treasuries, more recently, more of the 40 Act. And you want historical. One of the things that we're trying to do with WisdomTree Prime, I'm sort of jumping, and so it's not a perfect order, but I announced as a public company on the fourth quarter earnings call, and again in the first quarter, that we're launching WisdomTree Prime, which would be WisdomTree's wallet. And it is a way to have crypto, Bitcoin, Ethereum, and others sit next to traditional assets on the same rails. So right now, you really can't do that because everybody has the old rails, and then they launched crypto. And so it just sits in this isolated pool. if you could really put it all together on one tech stack, investing, savings, and payments could be done together. And it will enhance your experience with your own money. So what we did with ETFs, we enhanced your experience just with investing. But, think about, let's just take gold. WisdomTree is a big gold manager in Europe. We're like the third or fourth largest gold manager in the world. I ask you, Dan, you put money in gold. Are you putting it in gold as an investor or to save? Okay. Now, does it matter? Well, let's say you say it's savings. Let me ask you another question. WisdomTree is the leader in floating rate treasuries, which is shortest duration treasuries. So very constructive for a rising rate environment. Are you saving or investing in floating rate treasuries right now? Now, it has no return, but it didn't go down. When you tokenize floating rate treasuries, it will look a lot like, from an experience standpoint, your savings account. It won't be deposits. Certainly won't be deposits of a commercial bank. It'll have a custodial bank. Definitions blur, and it's going to be very disruptive in broad financial services. Because we are regulated, which makes us different in technology than many other industries, we've been very slow to evolve. So the way our industry most broad financial services, it starts with a savings account. Save your money. Then somebody had another idea. We're going to create a brokerage account, and it was separate. And then somebody else had, let's give credit. Let's have a credit card, and they're separate. And all these things are these turfed off ecosystems, walled gardens. With blockchain technology, there is an opportunity to break down the walled gardens, put these things together, and definitions may change, but at the end of the day, you, the investor, you, the consumer, will pick up functionality, again, because structure matters. So you'll have transparency. If it was transparent and tax efficient, it should be as tax efficient in this new wrapper, in this new format, this tokenization. But we'll add, how about sending it peer-to-peer? Well, that's a new functionality that you might find of interest to send to your children or your wife. You want to move your money more easily around. Now, there's regulation, then there's the technology. What's so cool about gold travels around the world like Bitcoin travels around the world, but like the S&P 500 does not travel around the world. That fund exists in the United States. There can be another fund in Europe, but the same fund will not travel because of regulation, but gold can travel. So you see a whole thing like remittance could open up as a business model to WisdomTree. There's just so much that will happen because there's so much efficiency and additional functionality possible on this new set of rails. And what I find is what was lacking in the industry was somebody willing to put the hard energy through getting the appropriate regulatory approvals. So we knew that we couldn't go unregulated. We are fully regulated, everything we do is regulated. But when you're dealing with money, it should be regulated. Only toy money, play money can be on the side, not regulated. So I found that my skill set, WisdomTree's skill set of dealing with the regulator, lined us up very well for what was necessary for blockchain-enabled financial services to evolve. You need to put a use case, a specific use case in front of the regulator You can't do it in a grandiose vision. You actually have to put something in front of them and build it one exposure at a time, which is not different from how the ETF industry, if you go back to the early days, exemptive relief was time consuming. It took a lot of money. If you did anything differently, it took a lot of time and energy, and you weren't sure that you would actually get through. So that was a bet I was willing to make because I made it in the past.
The interesting part about what you were saying to me was that I think often your company is viewed strictly as an asset manager, but in fact, especially with the gross margins, you're a solution provider, almost a technology company, arguably, or a software company with the margins that you've got. And your approach to blockchain is putting all the pieces together to evolve and offer a different set of solutions, whether it's wallet, whether it's access. Talk to us a little bit about your latest announcement that you just came out yesterday.
You're talking about Fireblocks?
Fireblocks, yes, so, thank you.
I mean, Fireblocks, one thing that we do is we manage vendors to execute these investing experiences. State Street, Mellon, we have lots of world-class relationships that we manage. We don't do it all ourselves. And Fireblocks is an important element in our compliance architecture for launching tokenized exposure. So, it's integrated in, it's a security and compliance regime that will be integrating into our experience. So, it just, again, you have to patch it all together to get to the other end of this. And we're just trying to use the best of breed, knowing where we're trying to go. One thing that made WisdomTree interesting about sort of tokenization, in the early days of tokenization, the easy money was, let's tokenize illiquid assets, something that has a very unsatisfying investing experience. And through tokenization, we can make it somewhat better. WisdomTree approached it. ETFs are the best experience on the old rail. So it is the best investing experience you can offer today. Can we make that better? And that is such a high standard. And so that's really, we would not have launched if we couldn't add functionality to what is in the market today. So one of those elements is peer-to-peer. Others will be the way to move your money, to tie it so that you can use your, like gold, to buy and sell things, like actually make purchases so that gold becomes currency like it was hundreds of years ago. Really that's the kinds of patching it all together so that your experience is better with your own money. That's really what we're trying to do.
So where do you stand on WisdomTree Prime, the mobile app? How close are you to really getting it all going together?
So we've been working on this project for years. We announced that we'll be beta testing at the end of this quarter and really rolling it out nationally by the end of the year. So I think that, that's the time frame. So a lot of it is about to come to market, and a lot of sort of regulatory investment, just a lot of things that you had to do to get yourself organized for what we're trying to do is coming together right now. We've built a little team within the company. But one thing that I always like to point out, this is so, again, like I said, we're in the business of transparent exposures, and, we're 250 people worldwide. 230 of them are on the ETF, ETP side of the business. But almost everything that the 230 people do day to day is of relevance to launching WisdomTree Prime or tokenized versions of traditional assets. So it's very synergistic. It's why we could do what we're doing so efficiently.
Yeah. So is it fair to say, and I may be putting the wrong words in your mouth here, so forgive me, that it's possible that you're going to transform from strictly an asset manager focused on ETFs to a platform type of company delivering, an investment platform.
I think that it's fair to call WisdomTree Prime a platform. If we scale it, it'll be a platform. And I would say you called it an investment platform. And I would say it's broader than that, because it'll be a merging of savings, investing, and payments onto WisdomTree Prime, which is, again, you could call it a platform. So very comfortable with the way you described it.
So you've also had to make some venture capital investments, through WisdomTree. Talk to us a little bit about Securance and how you go about the venture capital side of things, because at the end of the day, what I think often is lost in the way of blockchain is that venture capital is driving this change, and you've got some participation there, whether it's at the corporate level or otherwise.
So it is corporate and it's strategic. So the reason we made an investment in Securance is they had a vision for embedding making their token compliance aware. So what I wanted is, could I send gold around the world? Could I let gold travel, let's say, to Japan, but not North Korea? Could it travel to Israel, but not Iran, where it's illegal to do business? So now, what that enabled me to do, one of the benefits of blockchain is it's global. So if you're trying to improve upon the investing experience or the experience of your exposures in ETFs, one would be globalization, right? So my gold right now is regional. It's in Europe. It's no one from the United States is buying it, and no one from Europe is buying GLD in the States. So that's just a slight improvement. Can you make it global? I couldn't figure out if I saw in theory that you could use DLT tech or blockchain technology to make for a better investing experience in theory. I needed their vision implemented, and we've implemented their technology into our compliance and wallet development. So I made an investment. It off my balance sheet, WisdomTree's balance sheet. It didn't flow through the income statement, which is constructive. I'm not that big a company. It could be hard to do, but they had expertise that I didn't have. So they've got their 60, 65 engineers working on a number of projects, one of them being WisdomTree Prime. And I made that investment because I couldn't see how to make tokens better than ETFs without them. So they had a vision for interoperability, meaning it could travel around the world from one chain to another. I thought that was, so they had a vision for open gardens. Right now, we work in a world of closed gardens, meaning, you go on the Merrill Lynch and it's a closed system, and everyone has a closed system. Exchanges are semi-open. They take a lot of people in, but they become their own ecosystem. And you talk about DeFi or Web 3.0, will you need an exchange? You may not.
Yep.
WisdomTree Prime, if it has 1 million users and you're able to trade assets amongst yourselves, are we an exchange? Not by legal definition, but maybe by functionality. A lot of semantics, it gets very, very confusing. And we have a flexible approach to how we are viewing our role in financial services. And what drives me is I think about my media background, I'm a magazine company in a world of newspaper companies, and the newspaper companies were the height of journalism. Then the internet comes out, and not one newspaper company is stronger today than, since the internet came. Why is that? They were in the information business, but they thought of themselves not as an information business and delivering information in the most user-friendly way, but they thought of themselves as a newspaper company. It's why so many active mutual fund managers, right? If you called yourself that, you had to miss, a lot of the ETF early days because the SEC hadn't approved active. So it all blends.
And then there's on-ramp, right? And you were solving a problem for the financial advisor in that's the goal, right? How did that decision come about, and what's your outlook?
So I don't believe in the United. So we have crypto ETPs in Europe. We do not believe crypto will really emerge in the ETP wrapper in the United States. The SEC's take on it will stifle the ability. So we have baskets in Europe, and we're struggling to get physically backed Bitcoin into the United States, though we have it in Europe. So I thought and think that the wrapper that will be most conducive to crypto will be SMAs. And on-ramp was a technology that would connect the RIA to the SMA. And so wanting to facilitate bringing crypto to the masses through their intermediaries in the United States, it facilitated. On-ramp was another version of securrency in a sense. It facilitated our being able to execute where we thought we should be playing in the new world order.
And by the way, I have signed up for WisdomTree Prime, so please count me in on as a beta. So I think we've covered everything. Is there anything that I haven't asked you that I should have asked you in regards to where you think you're going in the context
the only
of
thing, I would just say that the ETF industry is got decades of success and growth, and it is so vibrant and strong, and it has been one of the great areas of innovation in asset management for the last 30 years. I completely believe in it. I am also looking though to what's new to see. I launched in 2006, 13 years after State Street. I'm wondering, is there an opportunity to bring asset management onto the blockchain, but actually be ahead of State Street, Vanguard, and BlackRock? And I think that there is that opportunity. That's what we're trying to do, make it, as user-friendly as ETFs. So if ETFs were built on the back of exchanges and brokerage accounts, the WisdomTree Prime is really built on telecom, on the mobile phone, which is even more convenient. So again, great inclusivity in the future that we're seeing. But it's an exciting time. These are exciting, challenging times in financial services. And it's nice to have enough critical mass and having gotten a head start that we might be constructive in helping this evolution. And we're just trying to play a role in it. And I see an opportunity. And I think being early and first is a good business strategy to, being just flat out smarter than people. It's not easy to just pick better stocks and deliver better after fee performance in the old wrapper every day. It's just a hard thing to do. Nobody seems to do it consistently. So we're just trying to be relevant in the new world order and sensing that real change is on the horizon.
Yeah, I remember having conversations with you about the goal of getting to 10 billion, getting to 20 billion, and here you are around, I don't know, maybe 76, 80 billion dollars. So congratulations. I know how tough it is. It's a grind. Let's be honest. It really is. So I always have two wild card questions I ask my visionary CEOs, right? So looking out to 2025 or 2030, what do you think people will look back and say, that solution needed, it was so obvious, I should have been a part of that change, right? And putting aside, if you can, financial services, because that's just too obvious.
Well, with even though you say financial services obvious, it really hasn't happened. It hasn't happened. And, when I met you in 2006, there was so much skepticism about ETFs that it's hard to believe. Now, today, it's accepted, right? You never have to defend, but there was literally a 10, 15, 20-year journey of having to explain why. And the reason you had to explain was there were legacy issues that kept people from taking advantage. Like the newspaper did not want evolution because they were the king of the information hill, but they lost it. It'll be obvious that, in financial services, that crypto and traditional assets should sit seamlessly side by side. That will be one of the earliest use cases when you talk about 2025. That will be a trigger for people. This will prove to be an easier way to hold crypto, and it can sit next to your other assets. And with that, now you can start sort of doing your financial life in a way that you couldn't do on the old rails. So I think it will become more obvious as you do it. It may be obvious today. It's just that it's not easy to cannibalize your own business models. So that's what's so hard. In financial services, it doesn't lend itself to venture in the same way, because you need an appreciation for regulation in financial services. But I think it's going to transform everything. Like your information, you're seeing it now in your iPhone, where you now have privacy issues that you can work so that on the iPhone, you can stop them from tracking you in some ways. Apple will still track you, but everyone else will not be able to. Your information, your health information should be tokenized, right? You should then be able to share it with who you want and not. Your whole person should be tokenized so that you could share in the economics that you allow Google to sell against. I think it's just going to be, I think that it will be transformative for a lot of industries have already been transformed by this. I mean, when I think back to, I launched in 1988, and I think about like 1991 and Netscape, and I could see the death of print. What I couldn't see then in 91, though, was Netflix and how it would change the way you view television. I mean, so much investment needed to be made. I think that these new rails will do to your money what the iPhone has done to your photography. It's going to change your relationship with your own money over time. It will become more and more apparent over time, but it'll be a slow build because financial services don't move as quickly as an information product. It is your money. It has to be safe. It's got to be secure. It has to be regulated. It has to have anti-money laundering and know your customer fundamentals or foundations built into the products themselves. And all of that is being worked through right now with the regulators. But I am expecting that your money will change in the future, and that will change a lot of things. It'll have a ripple effect like the internet did on information. We're seeing it potentially appear around your money, your assets.
So, Jono, as we conclude this interview, and thank you again for doing it with me, I think back beyond finance, what other industries are going to be changed by the blockchain? Because there's going to be a lot of disruption. We know that. Can you think out of the box beyond finance, and what other industries might be changed by blockchain?
I think that there's a high probability that medical technology, medical data could be transformed through. It's a very inefficient system today, not so dissimilar from financial services, that it's a very fragmented, closed set of data. I think could benefit tremendously from the transparency of blockchain. So that might be an area that also benefits tremendously from blockchain in going forward, I think. But I got to be honest, so many industries have been pushed already by technology. The one that's really lagging is financial services, and really that's where my head is.
That's fine. By the way, I totally agree with you. And as an example, I'm not sure why we can't control our own healthcare records. And that would be perfect on the blockchain. So thank you for your time today. Definitely enjoyed catching up with you, and look forward to seeing your company evolve and just keep blocking and tackling.
Thank you so much. It's a pleasure to spend this time with you, and thank you for including me. Have a great day.
Be well. Bye.
Bye-bye.